Hello, my name is Peter Douglas and I am the CEO of IPAF. Welcome to our webinar coinciding with the launch of our 2022 rental market reports. Firstly, I'd like to thank our sponsors for this event, and they are Skyjack, Palazzani, Hinoa, Inspire and Gem1. Thank you very much for your support. This is the 13th year that IPAF has produced, in conjunction with Ducker Research, our Powered Access rental market reports. As with last year, the reports will focus on North America, the top 10 European rental markets, China, and the three main markets in the Middle East, Saudi Arabia, the UAE, and Qatar. This year, we've added a fantastic new membership benefit. IPAF members that are rental companies, manufacturers, dealers, distributors and suppliers can claim a relevant report free of charge. Simply order one at ipaf.org/reports. So you're going to hear shortly from Euan Youdale, editor of Access International. Euan will give his invaluable and unique insights into the world market of powered access rental, looking at the different trends across all of the global regions mentioned. Then you will hear from Anne Myon, Director at Ducker Research, who will go through the key findings from one specific market. We're doing a bit of a deep dive into an individual country report to show you some of the things included in the individual country reports, hopefully with a view to getting a lot of you guys that are focused on one region, one country, to see that the information held within these country reports is very valuable to you for lots of reasons, including investment decisions, benchmarking against your competitors, and against the whole of the market within those particular countries and regions, and seeing what trends and forecasts are with a view to helping you budget for 2023. And then I will do a quick wrap up and summary and tell you about a couple of events that are coming up in the IPAF calendar. But firstly, I'd like to introduce our first sponsors video.
Hello, and thank you to IPAF for inviting me to take part in their webinar. If anything, the challenges much of the world was experiencing last year have become more entrenched. North America and Europe, along with many other parts of the world, have seen COVID restrictions lifted over the last 9 months, since the last IPAF rental market reports were published. However, hopes that supply chain issues, including long lead times and raised material prices, would be a thing of the past by now, have been dashed. And apart from the humanitarian crisis, the war in Ukraine has exacerbated those problems. In China, the opposite appears to be the case. Having largely left COVID behind in the second quarter of 2020, production levels soon returned to normal, which led to Chinese equipment being available, while the backlogs of Western manufacturers grew longer. Now, with COVID-19 having taken hold again in the country, the Chinese government has chosen a zero-tolerance approach. The long-term effect of this approach is not yet known. One thing is for sure, the global access sector is possibly as uncertain as it has ever been. In this report, I will delve into those challenges and opportunities in the regions and countries covered by IPAF's reports, notably North America, Europe, the Middle East, and China. Starting with China, I did use the word uncertainty in relation to the country. In reality, if there is one thing that does seem certain in China, then it's the growth of the mute sector there. Here's one example. Shanghai Horizon, one of China's largest rental companies, grew its fleet from nearly 55,000 units this time last year to an astounding 97,000 plus units as it stands today. Although that figure is above the average growth rate of the country's access market of around 40% year on year, some commentators believe the mute population could reach 750,000 units in the next 4 years or so. With China's access market now on a definite march to maturity, it seems unlikely that wider national economic conditions will get in its way, unless the spread of Omicron leads to long-term closures of factories and hinders the ability of OEMs to get products out the door. Nevertheless, there are strains in the Chinese access market, massive competition between the general construction companies in the country that have set up access divisions in the last few years, and the more established specialist Chinese manufacturers, alongside the Western OEMs operating in the country, has driven down prices. At the same time, the major rental companies have also been driving down rental rates, which is unsustainable in the long term, and in the end, there will be winners and losers in the market. The North American access and rental market has been returning to boom conditions, with demand in many sectors at an all-time high. The American Rental Association, the ARA, has upgraded its growth forecast for the US rental market and is now expecting an 11.1% increase this year, which is significantly higher than the figure issued by ARA in October last year. This is partly due to pent-up demand brought about by COVID restrictions and the US government's $1 trillion infrastructure bill. However, although OEMs are seeing significant revenue rises, profits are being hit due to higher material costs and logistics challenges. And while the order books are at record levels, so too are the backlogs, again, as a result of the long lead times caused by supply chain problems. Another uncertainty in both the USA and European markets is the increasing cost of material and component prices, which to a certain extent is being passed on to the customer. However, where equipment prices are being agreed now for equipment that may not go into production for many months, OEMs risk being caught out by even higher price components when they do eventually become available. But these challenges are not stopping anyone, and rental companies as well as OEMs are reporting strong growth, which is being fed by recovery across construction and industrial applications. US and European-based OEMs do have the lead on Chinese manufacturers in both their continents due to their long-established presence there. Having said that, Chinese equipment producers are ever more present in those markets. The import duties on Chinese mute products imposed by the US Department of Commerce in October will hinder their spread in the USA, but it is unlikely to deter them long term. The European market is wide and diverse and was affected differently by COVID depending on the country and its restrictions, with southern European nations plus the UK seeing more declines in the industry than northern European countries overall during 2020. Conversely, rebounds in Italy, Spain and the UK, for example, in 2021 have been greater than their northern counterparts in general since COVID restrictions have been lifted. Of course, the war in Ukraine has added a whole new layer of uncertainty to the continent. The International Monetary Fund pointed out in recent weeks that beyond the humanitarian crisis and its effects on the global economy, neighbouring economies, including the Nordic countries covered by the IPAF reports, in particular will grapple with disrupted trade, supply chains, and an historic surge in refugee flows as a result of the war. For this reason, it is difficult to judge how the sector will be affected in 12 months' time. However, an example of the uncertainty comes from Horlot. The French manufacturer reported strong first quarter 2022 revenue growth, but held back on making a full-year forecast due to the unknowns surrounding the Ukraine war. So, the full consequences of the situation in Ukraine are yet to be seen. However, the European-wide mute market can be described as buoyant. One nation that has an extra factor to deal with is the UK, now that it has left the European Union. The access market there is booming, although according to the European Rental Association, the challenges have been deepened by Brexit, as the sourcing of materials, increased costs, and the labour shortage bite harder. In September, we reported that there is a mixed picture in Germany. While stability was the overriding experience of the general rental and construction market during 2020, the mute rental sector there was less buoyant. The picture this year remains mixed. The Committee for European Construction Equipment, CC, says sales of equipment was up by more than 20% across all product segments in the country in 2021. However, while Germany also saw growth, it was the only country to record growth in only single-digit figures of 9%. Perhaps summing up the European market is France. Home to some of the largest access rental and manufacturing companies in Europe, France is an important indicator of the state of the sector. In its most recent financial results, France-based rental giant Loxam tells a positive story. The company's revenue in France was up in 2021 by 15% compared to 2020, with the company saying in its financial statement that business has already reached a pre-COVID-19 level of activity, with demand continuing to grow as economic conditions remain positive. In the Middle East, an increasing number of urbanisation projects will drive growth in the construction sector, according to information released by Global Data. While the COVID-19 pandemic has slowed down project spending in the region, the ongoing modernisation of populous regional centres will drive demand for construction. Residential projects are particularly pushing real estate construction in Dubai, and Saudi Arabia's Vision 2030 mega project initiative that ranges from skyscrapers to theme parks through 15 different mega projects will offer increased work for the rental industry. Find out more about the Middle East and the other countries we've mentioned in IPAF reports. Now on to something slightly different. On the registration page for this webinar, IPAF included a question to the presenter's text box, and the following two questions were raised, so I'll have a go at answering them. Firstly, the question was, what are the top 3 purchasing factors for a rental company buying a new machine? So, from the views I've gained from the industry, there seems to be an ever stronger emphasis on total cost of ownership. And with cost of equipment going up due to supply shortages and the increasing adoption of more expensive electric-driven mutes and telematics, rental companies are looking at a longer-term return on investment backed with exceptional service provision. On the subject of electrification, some rental companies, particularly in Europe and China, are now seriously weighing up their options, with the risk being that in a few years' time it may be difficult to sell a diesel mute on. Therefore, residual value is taking on a new emphasis, as is more flexible equipment that can be used across a range of applications. The second question was, how do you view the decline in rental rates, and how do you think the impact is going to be addressed to avoid a decline in quality of service and continued investment in technology? Well, we are hearing in the US that rental rates are picking up due to the growth in the economy. However, challenges remain there, and certainly in Europe and China, there are challenges too. As I've mentioned, in China, rates have been driven down by the extreme competition, and it may take the rental market to become more mature before rates do rise again. In Europe, there is a school of thought that rental companies need to work together to raise rates to a more satisfactory level. One thing is for sure, with supply chain issues and more advanced technology being introduced to mutes, the cost of new equipment is unlikely to go down, and the safety and environmental demands of modern work sites will continue to rise. Therefore, the market may be forced to reevaluate rates in the not too distant future. Well, that's it for me, and thank you very much for watching.
Hello everyone, and thank you for joining our webinar. As every year, Docker is preparing the IPAF new rental market reports, which look at the evolution of main market indicators in various regions: Europe, North America, Middle East, and China. I am Anne Myon, Managing Director at Docker, and will present an extract of one of our country reports. The estimates and market vision presented in the new rental market reports are developed using a methodology consisting in triangulating data coming from in-depth interviews with market players, rental companies, but also MUP manufacturers and other market experts such as supplier of manufacturers, association representative, etc. We also use secondary information related to construction, rental statistics, and other macroeconomic indicators. IPAF has been partnering with Docker since 2009. We thus now rely on 13 years of historical new rental market data. And over the years, Docker has shown an excellent track record of forecast accuracy. The IPAF new rental market reports offer an in-depth analysis of the new rental markets in Europe, North America, China, and since 2021, a vision of the Middle East market. For each region, Docker analyzes market revenues and growth trends, fleet sizes and expected evolutions, fleet mix, including alternative energies penetration trends. We also examine rental companies' investment fluctuations and observe operational indicators like utilization rates, retention periods, payback periods, and rental rate evolution. These indicators, trends, and forecasts are extremely useful for companies active in the market. Rental companies, of course, but also equipment manufacturers, suppliers, and even investment funds, as they empower these companies to take informed decisions, whether investment planning, growth strategy, or business orientation. So today, we will present to you an extract of the UK report with a look back on the year 2021 and forecasts for 2022 and 2023. Before starting, Docker and IPAF would like to thank all companies who kindly participated to the project preparation and estimate development. After several challenging years due to both Brexit and the pandemic, the UK MUP rental market experienced a better year in 2021. Let's take a closer look at market indicators and how they have evolved in the past couple of years. After being severely hit by the COVID crisis in 2020, the UK market rebounded and most market indicators went back to or even beyond pre-pandemic levels. First of all, the MUP rental revenue evolution exceeded expectations. Fueled by a strong demand in the construction sector, it grew by 11% in 2021. Part of this increase in revenue was generated by higher than usual cross-hire activity, as companies needed to compensate for the lack of some machines in their fleets. Outlooks are positive, demand remains high, and additional revenue growth is expected in 2022. Before reviewing the fleet size, I would like to remind that we exclude low-level access equipment from our scope, and we know that these machines hold a significant share of MUP rental fleets in the UK. The MUP fleet size grew moderately in 2021 and went beyond 58,000 units. Many rental companies were not able to procure MUPs to the level of their investment plan. This element, combined with the effect of the moderate defleeting that happened in 2020, created increased pressure on the fleet size. The fleet is forecast to grow in 2022, but could be hampered by manufacturers' inability to deliver the ordered quantities of machines and increase lead times. In order to mitigate this issue, MIUP rental companies are likely to turn more towards Chinese manufacturers for their future orders. After the massive drop in 2020, under the effect of several lockdowns, utilization rate went back to its pre-pandemic level at 68%. The third national lockdown early 2021 had a negative impact on utilization, but demand during the rest of the year was strong, driven particularly by significant activity in the construction sector. Utilization could increase further in 2022 as demand is forecast to go further up, while fleet size develops at a more moderate pace. For several years, MIUP rental companies in the UK had led a strong war on price, leading to continuous decrease of prices since 2015. In 2021, for the first time in 6 years, companies could stabilize or even slightly increase their rental rates and bet on further rental rates increase in 2022. However, these increases in rental rates are reported to not fully compensate for the strong inflation growth happening currently. We just took a close look at the UK market, but I would like to share some general trends regarding the rest of the world. Europe as a whole experienced a 7% revenue increase in 2021, reaching almost its pre-COVID levels. The market growth has been driven by sustained demand, time utilization recovery, coupled with some fleet expansion. 2022 is showing positive signs, and further rental revenue growth is expected. However, some question marks remain. The elements of uncertainty cover three main topics. The first one, the war in Ukraine and its potential impact on construction activities. Second one being the global raw material shortages and MIUP manufacturers' capability to ensure equipment delivery. Third one, the growing inflation and MIUP rental companies' capabilities to limit margin erosion by transferring price increases to their clients. In terms of equipment trends, the market continues to see the penetration of electric engines growing in both scissors and boom fleets. The North American market is showing an even stronger picture than Europe regarding 2021 rebound, with double-digit revenue and fleet size growth rates. China market kept growing at a tremendous rate in 2021, and Chinese MIUP rental fleet size now exceeds 300,000 units. Outlooks are moderately positive as large cities currently experience strict lockdown situations due to the zero COVID state policy. Globally, most rental companies report that the trend towards sustainability and reduction of carbon footprint will be the key challenge of the years to come. We hope that this short presentation answered some of the questions you had. More elements will be available in the IPAF MIUP rental report, which will be released in June. More specifically, you have the option of ordering several report packages: Global Report and all countries, Global Report and one country, Individual country report, including the North America report. All the information is gathered on web link shown here. Thank you very much for your attention.
Thank you very much to Euan and Anne for those great presentations and insight. Hopefully you saw from Anne's update, the individual country reports go into quite a bit of detail. I would hope that you see that if you're in a particular region and you've not had these reports before, they will be of use to you. As I mentioned before, the reports are available to IPAF members that are rental companies, manufacturers, dealer distributors and suppliers free of charge this year. And other IPAF members can get individual country reports from as little as €174, £145 or $182. Surely worthwhile for your particular country if you want some insight to help you forecast, budget and make some financial investment decisions. A huge thank you once again to all of our sponsors for today's event: Skyjack, Palazzani, Hinoa, Inspire and Gen1. So just to let you know about our next IPAF webinar, which is on the 30th of June, that will be launching the latest IPAF Global Safety Report. Full details on this and all future events can be seen at www.ipaf.org/events. Thank you once again, and please order your rental market reports at ipaf.org/reports. Thank you very much.